Let's talk about a single, chaotic 24-hour period. A time when war, a flood of misinformation, and just pure panic sent the global market into a tailspin. We're going to walk you through this chaos, using the real-time insights from the traders at PhilStockWorld, who were right there in the trenches, navigating the market's fog of war. You know, this quote from Lenin, it just perfectly captures what that day felt like. It was like a decade's worth of geopolitical fear and risk got jammed into just a few hours. And while most of us in the US were still sleeping, markets around the world were already pricing in a brand new and pretty terrifying reality. So it all started with this one number. On Sunday night, this figure flashed across trading screens everywhere: $119.50. That was for a single barrel of Brent crude oil. And that, right there, was the flashpoint. It was the trigger that sent a shockwave of pure panic rippling across the globe. Okay, let's dive right into what happened. Before the opening bell even had a chance to ring in the United States, markets in Asia and Europe were already just staring into a financial abyss. The overnight session was a sea of red. It was a brutal gut punch of a reaction to that oil spike and the news of escalating conflict. And just look at the disconnect on this slide. It's wild. On the left, you've got the headlines we all saw, words like meltdown, crater, bloodbath. But on the right, you see the internal view from PhilStockWorld. Their diagnosis? The entire baseline was FUBAR, a military term, basically meaning everything is completely and utterly broken. Their point was huge. In this new world, all the old data, every single Q4 earnings report, it was all suddenly meaningless. The entire rulebook had just been tossed out the window. But here's where the story takes a turn. Right in the middle of all that panic, a totally different idea started bubbling up inside the PhilStockWorld community. People started asking a really critical question. Was this a real systemic crash, or was all this panic creating a totally different kind of opportunity? This quote from a member named Marco just nails it. He argued that real system-ending crashes, they usually come after a period of insane, euphoric buying, what traders call a blow-off top. You know, the big party right before the collapse. But we hadn't had that. Instead, Marco saw the perfect setup for a violent squeeze higher, a really painful trap for all the panicked sellers who were desperately running for the exits. So that became the central question of the day. Was all the fear justified? Was this the start of a long, painful downturn? Or was the fear itself creating this massive, maybe once-in-a-while opportunity for anyone who could see the mechanics playing out underneath all the noise? And that, right there, brings us to the reversal. Because what happened next was just mind-bending. The market went from the absolute depths of despair to something close to euphoria in a matter of hours. It was one of the most incredible single-day turnarounds anybody had seen in a long, long time. I mean, this timeline really shows you the whiplash. It kicks off Sunday night with that oil-fueled panic. By Monday morning, the G7 is talking about an emergency oil release just to try and stop the bleeding. But then comes the real pivot. A single social media post in the afternoon suggesting the war might be ending. And that's all it took. By the 4 p.m. close, the S&P 500, which had been deep in the red all day, was somehow positive. But this is where the market story completely detached from reality. The rally was running on what the analysts called hopium. On the one hand, you had these nice stories, the G7 promising oil, the White House hinting at peace, but the physical reality was totally different. The pipelines can only move so much oil. The Pentagon was contradicting the White House. Yeah, one tanker got through, but thousands more were needed. The market narrative was crisis averted, but the facts on the ground showed producers were actually shutting down. So how in the world do we make sense of this bounce? Well, to get a real data-driven reality check, we're turning to the PhilStockWorld AGI Round Table. It's a team of specialized AI personas designed to cut right through the market noise. They basically deconstructed what was really driving this so-called miracle bounce. This quote from GEMINI, the lead AGI persona, just gets right to the heart of it. The rally was a masterpiece of cognitive dissonance. In other words, the market chose to believe a comfortable story while actively ignoring the hard, inconvenient facts. It's like it was covering its ears and singing la la la. And the key takeaway here is so important. Just because your screen is green, it doesn't mean the risk is gone. And this chart, which was inspired by the AGI's satirical analyst, really captures the absurdity of the day. I mean, on a day when the entire global energy supply chain is fracturing, look where Wall Street's attention was. Geopolitical reality? Maybe 10%. The rest? A diet pill company, Hims and Hers, rocketed up over 40%. A concert monopoly, Live Nation, jumped 9%. It's a classic case of capital chasing these feel-good stories while ignoring a 5-alarm fire in the global engine room. You just can't make this stuff up. Meanwhile, the physical markets were telling a completely different story. The oil futures market went into something called extreme backwardation. Now, that sounds technical, but what it means is actually pretty simple. The price for oil right now was way, way higher than the price for oil delivered a few months from now. And that is a classic textbook signal of a severe but temporary supply shock. The physical market was screaming this was a short-term crisis, which totally contradicted the rally's all-clear story. So the AGI team's final conclusion pulled it all together. Marco, the trader from the chat room, was mechanically correct. It was a massive bear trap. But, and this is the important part, the reasons for the initial panic, the war, the supply shock, the broken logistics, all of that was still there, just hiding right below the surface of that one-day rally. Okay, so this brings us to the most important part of all, the playbook. How do you take all this chaos, all this noise, and cognitive dissonance, and actually turn it into a clear strategic plan for what to do next? Well, it all starts with their core philosophy, and I love this. Be the house, not the gambler. What does that mean? It means don't bet on the next headline. Don't try to guess the outcome of a war. Instead, you build a portfolio that methodically plays the probabilities, one that's designed to withstand shocks, no matter which way the ball happens to bounce. The gambler hopes. The house has a plan. And that philosophy leads directly to this clear 4-step plan. Step 1, use the gift. This miracle rally was a gift from the market, a chance to sell into strength and raise cash. Step 2, watch the line. There was a key level on the S&P 500, a hard deck. If it broke, that was the trapdoor to lower prices. Step 3, maintain your hedges. Don't get complacent. And finally, step 4, my favorite, anchor to the physical wall. That just means deploying new capital only into companies that are grounded in the real physical economy. And that physical wall is built with what they call halo stocks. The acronym is great. Heavy assets, low obsolescence. We're talking about companies with massive tangible infrastructure, things you can actually touch, things that can't be disrupted by a new app. In a world of physical supply shocks, when the baseline is FUBAR, these are the companies that become absolutely essential. And here are some classic examples. Defense contractors like Lockheed Martin, energy giants like Exxon, critical infrastructure, think pipeline operators, and even boring old blue chips like Coca-Cola or AT&T. These are companies with vast physical footprints that have proven time and again they can operate and thrive through wars, recessions, you name it. Which really leaves us with this final thought to chew on. That one chaotic 24-hour period showed us that the market can swing from pure panic to pure euphoria based on nothing more than, well, hopium. So in a world like that, maybe the biggest risk isn't failing to predict the future. Maybe the biggest risk is not having a plan that's anchored in reality.